Boom shakalaka. What is going on, everybody? Randall here from Crypto Love. Today's episode, we are going to be talking about the crypto news for the week. Some stories we'll be taking a look at, aside from where Bitcoin price is going, is also the Chinese New Year price slump. Tim Draper saying more millennials should invest in Bitcoin. Litecoin proposing 1% donations for development. And Coinbase nearing 1 million BTC on its wallet. So if you think that stuff's interesting, definitely stay around for today's episode. Okay guys, what is up today? We are looking at the news for the week. Right now, Bitcoin dominance at 66%. Overall, if we take a look at the percent change over the past 7 days, mostly in the red. Most other cryptocurrencies following Bitcoin, a few of them positive up to 10-15%, but most of them negative, down around 5%, shadowing what Bitcoin's doing. Now, where is Bitcoin right now? I'll tell you, it is down in its downtrend, but it is about to reach this long uptrend that we've seen since about February of 2019. Now, when we reach that bottom, will be in the next couple months, and we'll have to see if we continue in this downtrend or if we break into the uptrend. That'll be definitely interesting. One thing to note here, the MACD has swapped, so from holding Bitcoin to holding stablecoin. That's what I have done on the daily. Now, let's get into some news. First thing is nothing special. Bitcoin slumped 6% on coronavirus Chinese New Year. So there's this whole scare about the coronavirus, Chinese New Year, all this stuff has caused Bitcoin price to tank. A lot of people saying it's not a surprise. Generally, with the Chinese New Year, we see up to a 20 to 30% decrease in Bitcoin price. This year, 6% down, not that bad. New report is out reporting Cardano as the busiest project in 2019. Now, this report was compiled using sentiment tools Sandbase and Sandata, which analyzed over 1,000 cryptocurrencies within the past 12 months. Cardano was billed as the busiest blockchain in terms of technical developments. The report attributes the growing developments of Cardano's ecosystem, which was cemented with the launch of the much-awaited Cardano incentivized Shelley testnet in December. The testnet, which went live in December, already boasts over 500 staking pools, with expectations rising among crypto enthusiasts. So Ethereum was narrowly behind, so Ethereum came in second. Now, if we take a look at this, one thing that I've always looked at to see what projects are developing is this cryptomiso.com. This looks like GitHub commits. Cardano doesn't even rate in the top 10. The top 10 are here: Insular, Elf, Holochain, List, Nulls, Chainlink, Rated Network, EOS, 0x, and ZooShield. However, it should be noted that a commit is just adding something. I mean, people may not make as many commits on different projects. So while this does tell something, it doesn't tell everything. Tim Draper is saying millennials should invest in Bitcoin for a few reasons. So according to Draper, millennials are standing at a point in history where they have the whole future of the world's financial system ahead of them. The problem is that millennials have inherited a system from previous generations that just simply no longer work for today's generation. The system is antiquated. He compares it to an Oldsmobile. It's an old Oldsmobile. And furthermore, according to Draper, putting money away 1 penny at a time to save for retirement is no longer working for millennials. He goes on to say that they're being born into a world already in debt, and beyond that, today's salaries simply don't allow young people to be paid off debt. Yeah, no kidding. Going to college has fucked over the whole entire generation. Because guess what? Everybody graduates college with an absolutely worthless degree, and they go work at a minimum wage job with $100,000 in debt. It's ridiculous. Now, one thing that I wanted to mention down here, this here says that cryptocurrencies are known to display extreme volatile behavior. In fact, cryptocurrencies have shown an average volatility reading of 63% in the last 6 months alone. Now, this wasn't the only article to mention that volatility. This article here, Bitcoin Risk Return, a different beast compared to Amazon, cited by an analyst. He takes a look, this chart here, citing the difference between Bitcoin and Amazon. Bitcoin is this orange dot, Amazon is a blue dot, in risk versus reward. So the risk is on this bottom scale. They're both right around 80%. The reward, though, on Bitcoin is much higher. And actually, Willy Woo has published a chart that's really good for that. Bitcoin risk-adjusted returns versus other assets. Bitcoin is this blue line. Everything else is down below here. So the rewards are much higher, independent of the risk, compared with U.S. stocks, U.S. real estate, bonds, gold, emerging currencies, and oil. So that's really great for Bitcoin. Now, Charlie Lee has proposed miners voluntarily donate 1% for development, because guess what? Developers really don't get that big rewards for developing in cryptocurrencies unless they were in a project from the beginning and the project took off very well. Well, this proposes to help the miners. What he's saying is, how about Litecoin pools donate 1% of block rewards to the Litecoin Foundation? If every miner pool does that, it amounts to about 1.5 million donations per year. And he says at the current Litecoin price, 1% of block rewards is about 7 times Litecoin Foundation's yearly expenses. Even if a small percentage of miners are generous enough to donate, the foundation will be able to put it to good use, funding developers to work on Litecoin Core, Mimblewimble, Light Wallet, Litecoin Network, Lightning Network Wallet, hosting the yearly Litecoin Summit, and pushing for adoption of Litecoin by merchants and users. One thing in this article I found particularly interesting was in response to 51% attack concerns, Dogecoin merged its mining with Litecoin in 2014, enabling simultaneous mining of the two assets. Notably, this joint Litecoin and Dogecoin mining impacts his new concept. So I thought that was pretty interesting. I did not know that they merged their mining. Now, one thing that I got over the holidays was a Crypto.com card, because this is one cryptocurrency credit card that you can get in the United States. So this is for people in the United States who want to be able to spend crypto with a credit card anywhere else you could do stuff. So Crypto.com, they just added even more features. So with the card that I have, I get, I think, 2 or 3% back on all purchases. Get to go into all the lounge. I have the lounge key, so in all the airports can go into the lounges there. Get Spotify and Netflix for free. Well, guess what? Some of the other things they have added include an additional 2% for Obsidian Black, Icy White, and Rose Gold holders. Also increased maximum account limits, so much higher. Also, they get Amazon Prime, and for the Obsidian Black card holders, they get private jet service. Now, should be known, you have to hold a lot of money in there. The Obsidian Black, 50,000 Monaco, I think that's about $200,000. So, you hold $200,000, you stake $200,000 in Monaco in there, and guess what? You get private jet service wherever you go. Now, listen to this. Tell me this doesn't make Ripple sound like a security, okay? So Ripple CEO hints at IPO, says more crypto firms will go public in 2020. So Brad Garlinghouse predicts IPOs will become more prevalent in cryptocurrency and blockchain space in 2020. He says in the next 12 months, you'll see IPOs in the crypto blockchain space. We're not going to be the first and we're not going to be the last, but I expect to be on the leading side. It's a natural evolution for our company. You guys know how I feel about Ripple. Nah, whatever. And lastly, this crazy news. Coinbase wallet nears 1 million Bitcoin. That's right, as many Bitcoin as Satoshi himself holds, or maybe Craig Wright, he's Satoshi. But this Coinbase right now, as we see in this chart right here, it's weeks away from 1 million Bitcoin. If growth continues, we'll see, wow, all the way up to 1 million Bitcoin. Now, what does this mean? Well, people trust Coinbase because it's kind of like a bank, has some custodial services. We feel safe with them. But on the downside, with cryptocurrency, the whole idea was your money, your keys. So this means less and less people are actually holding their own cryptocurrency. Not exactly great. Now, holding some on there is great, but you really want to be in charge of your own money. This article cites the reason for this is Coinbase's apparent dominance and steady growth may be because it attracts a large share of long-term institutional investors who are less concerned with short-term price swings and more interested in just the custodial services. So that could be why. Maybe it's not the retail investor, maybe it's more the institutional investors, but even so, that's a lot of Bitcoin to hold on one service. I hope they secure it pretty well. So that's all for the news this week. Thanks so much for watching. I hope you had a great weekend. I will see you more this week. I haven't seen you guys in a while because I got a strike on the channel, so I couldn't make videos for a whole week. But if you enjoyed this, definitely make sure to give it a thumbs up. Thanks very much. I'll catch you guys later. Make sure you check out the Monarch wallet, where instead of holding your crypto on Coinbase, you could actually hold it on a secure wallet that holds Bitcoin and 3,000 other cryptos. So check it out, monarchwallet.com. I'll see you later. Peace.